Good evening, good morning, good night to whoever watching this transmission. Tis I, Mike Martins. Welcome to another weekly Australian housing wrap-up and what's going on in the markets in the housing crisis in Australia. And it's a little bit of a tug-of-war between medias. I'm noticing the media itself kind of favoring it as a buyer's market, and some media, to little to no media, is covering affordability crisis. And you got a lot of real estate covering the news on the real estate markets, and the real estate, organized real estate, is basically telling people that it's the time to buy as prices are going to be ready to retake off. So it's almost, they're treating it like almost like Michael Jordan coming off an injury at the peak of his career. He's going to come back and make a difference, and that's what they're actually like portraying it as. Within months, Macquarie believes Australian house prices could increase far sooner than we think. So here's the thing. I don't know if people are making more money now in Australia, or they've all gotten like 40 to 60% increases in pay, because affordability levels is far out of reach. Australia is per debt capita, per household capita, is like for every dollar they earn, they owe back over $2. So even if Australia got so in dire straits and they slash rates to zero, no interest, they still couldn't pay back their debts. That's how far gone things have gotten, with a lot of people borrowing off their homes, thinking that it's just going to keep going up like the beautiful ATM machine on the corner, but it's not doing that. And that's a huge bet to lay, your whole future, everything is riding on it, your family and everybody. Australia's housing market downturn, already one of the longest and largest on record, has slowed in recent months. Median prices nationally fell 1% in January. April, they took a decline of 0.5%. It looks like they may fall another 0.4% in May, according to recent data. Macquarie Bank says that over the past 3 decades, house prices began to increase 5 to 7 months after the largest fall in cycle occurred. With history as a guide, Macquarie says prices could rise by July. I don't think so, and I'll tell you why. They don't want to discuss the money laundering in Australia, and I'm just going to throw this out there. For me living in Canada, I'll just throw this out there. Canada has $200 billion that was laundered through real estate. It wasn't layered through nail salons. It wasn't layered through antique stores that nobody walks into, and you walk by and wonder, how the hell does this place stay in business? It wasn't layered. It was dumped into our housing market. And it's crippled our economy and crippled the Canadian proper. And I believe that Australia has about 18 quarters of false gains. Did it gain? It should have gained some momentum, but not of the atrocity of gains, the craziness of gains of the last 3, 4, 5 years. So a lot of people argue that this started in 2016. Other people will argue saying it started in 2010. A lot of people argue said it started after 2009. But it's up to you guys. It's up to an interpretation depending on where you live, what pocket you're in. The prospect of RBA rate cuts and a modest relaxation in home loan lending standards, accompanied by the coalition's election victory, makes Macquarie more confident that the history will once again repeat. No. With the amount of, I'm throwing this out there, and I'm the one that's gonna. I'm calling on this. I'm calling on huge inflation. Huge money laundering. And then I'm also calling out on bad loans on the books. A lot of dirty loans. It's nice and sunny here. Lots of dirty loans. So we got ourselves a bit of a problem here. And they're not factoring in what the Royal Commission found. I'm pretty sure if they dug deep into, if they go to the branch level instead of the corporate upper levels, I'm pretty sure if they've taken it to the branch level and they started going through, rummaging through files and independent files through different loans and different loans on the books, I'm very sure you'll find that half of those loans are not even should have been written. You know what I'm saying? So, and Australia's housing market downturn, already one of the longest and largest in recent, has slowed down in recent months. From the 1% slump in January, CoreLogic data shows prices nationally fell by a smaller of 0.5% in April, which just a few days left in the month. The group's daily hedonic price series points likely to decline to 0.4% for May. So they're factoring in the fact of people leaving the major cities into smaller towns and pumping up those prices too. Once you start factoring all the people that move to Hobart and Canberra, hope I said that right, you start getting a fluctuation in prices and bringing up the median price across the board, because it looks like you got healthier areas and they're not taking into consideration the pockets that are being affected. Because I know Sydney proper right now is down anywhere from 9 to 14%, right? The price of falls is clearly slowing, although there's no sign of stabilization yet. Yeah. So here it is, 2019, and there is your fall. There it is there, in and around the 10-point mark. But Macquarie's Australian equity strategy team don't think it will remain that way for long, suggesting in a note released on Friday that prices could start to increase as soon as July this year. So basically, they're hoping for a turn, like what Canada did. Canada did actually quite a bit of work to keep our housing bubble going, right? That's why we're sitting on $200 billion in laundered money. And that's not $200 billion in pesos. Australia's house price growth reached its worst on an annualized basis in January. Prices have continued to fall since then, but the rate of decline has slowed. Strategists at the bank wrote, if you look prior to prior cycles, an increase in house prices occurred 5 to 7 months after through in the annualized growth rate. Using the average of 6 months, prices could rise by July. Yeah, no one's getting money, sweetheart. No one's getting approved for loans anymore. No one's getting... they're going to have to lower rates back to zero or below zero or negative interest rates to be able to keep this Ponzi scheme going, because people are leveraged. And without the young blood coming into the market and the young folk coming into the market to help revigorate the housing crisis, this housing crisis they're in, if you don't get young blood and first-time buyers, good luck, Chuck. As seen in a chart below from Macquarie, in every Australian house price cycle since 1989 AD, wherever the monthly annualized price decline has bottomed, the price growth has always followed within 7 months. So here we go. 89, 90, 95. So you're seeing the months in decline. So 6 months and 775, 766. So you're seeing the annualized. Now we know what you're saying. Past performance is not indicative of the future returns, especially as the current downturn was not driven by official interest rate increase from the Reserve of Bank of Australia, RBA. Something that has typically driven price falls in the past, but rather the impact of tighter lending and lending standards being rolled out by the Australia's banking regulator, APRA, since late 2014. That alone means there's no clear grounds for skepticism. However, Macquarie is not purely basing its assessments on what's happened in the past. What's happened in the past, you never had the amount of capital flows coming in from China in the past. In the past, I think it was a lot tougher to buy property in Australia back in the 80s. It was a lot harder. I think a guy like me would walk into Australia and I want to buy a house. They're like, you can't buy a house here. You're not even Australian. The same thing with Mexico. You go to Mexico right now, you can't buy nothing. I just spoke to somebody right now that came back from Mexico, then stayed in Arizona for a bit and just came back and visited me at the store. He says, Mike, you were right. I remember watching your show and you telling people that you can't own anything in Mexico. I got myself a lawyer because they were selling all these properties and lots of investors and expats buying. They don't own those homes. You could do a 99-year lease, but you'll never own the home, period. So Mexico protects its sovereignty, its way of life, its language, its culture. Mexico is not up for losing its culture and way of life, right? Like other Western countries, they're just open doors, right? Following statements from both RBA, APRA last week, that monetary policy and lending standards are likely to be loosened as soon as the next month. These potential moves, accompanied by the recent election results, have removed the threat of changes to the tax. So guys know what happened with Australia in the elections, and everybody thought the Labour Party was going to win, and everybody was in favor for the Labour Party, and it was a shock that the Conservative Liberals won. And very interesting to see what happens in the next 4 years in Australia, how they're going to keep this Ponzi scheme going. Treatment on Australia housing has made Macquarie more confident that history will repeat this occasion. With the surprise of the coalition election win, APRA's policy change, and an expected June RBA rate cut, we are more confident Australian house prices could rise within months, strategists at the bank wrote. This should flow through to better growth in housing finance and building approval. There's no liquidity! How are you going to do this? No one has two nickels to rub together! Last week alone, the median house prices in Sydney and Melbourne increased by 0.3 to 0.1% respectively. Right here. According to CoreLogic data, a rarity compared to the broader trend seen now for well over a year. Macquarie isn't the only forecaster that's become confident about the housing market outlook in recent weeks. Here it is here. Citibank too. Right there. House prices may look up in 2020, says HSBC. HSBC is saying more economists, more condiments have revised their forecast for Australia's housing market, with the reverse bank expected to begin cutting rates next week. Yep, they're gonna cut rates. Nobody has money though. People, it's not gonna work. It's okay. It might look good on paper, unless the banks start lying about income and lying about the TDS and underwriting the deal in a shady way so it gets approved, and Mickey Mousing it and sprinkling pixie dust over it. Nobody has money, and the first-time buyers are very weary about getting into any market right now. Borrowers still seeking interest-only loans despite falling house prices are RBA warnings. So people are looking for interest-only mortgages. Hey, never pay off your house. That's a great great investment. Oh, this is an old article. I'm sorry. It's from December 14, 2018. I am sorry. This is from almost a year ago. Sorry, 6-7 months ago. I am sorry. Let's move on. Now, from today, this one's a pretty good one. How did Perth property prices get to this point, and will they turn anytime soon? Now, Perth is a perfect model for all of Australia. Perth actually had resources. Unlike Sydney's economy is backed off housing, Perth actually had mines. Perth actually had open pit mining. Perth actually had a proper exporting economy until they sold most of their mines off to China, and they weren't like the Australian people weren't making the riches anymore, right? You sell out, that's what happens, right? How did Perth property prices get to this point, and will they turn anytime soon? Perth, once most had the expensive city for houses in Australia, is one of the midst of its longest, steepest downfall price decline in 2 decades. 2 decades of decline! Dos! In fact, Perth price downturn started in 5 years ago in 2014, and it's continuing today. So how are these guys saying, oh, yeah, next week, prices are going to go back up at Sydney. Next week, Pangulo. In fact, Perth prices downturn started 5 years ago in 2014. Perth prices soared in those 3 years to 2006 with an incredible cumulative climb in 94%. In the same period, Sydney prices fell 6%, said Bankwest's chief economist. This is before the money was leaving the shores of China. Perth housing affordability crisis was at its worst levels in years before prices in Australia, 2 most populous cities, started to race well ahead of the household incomes available to service the bigger mortgages that came with steeply rising prices, he said. Property prices eventually peaked in 2014, said Domain senior research analyst Nicola Powell, meaning they are now nearly back to levels seen at the end of 2011. That 2011 decline was the trough and was before the 2014 peak. So prices rose there through 2011 up to the peak of 2014, and now they're back to go through 2011 more or less, she explained. I should have a more feminine voice here, but here it is here. There's the median Perth's historical house price. This green line here represents the median price, and this is your annual change every year. Oh, yeah, you don't see any increases. So right here, see these big increases here in 2010? You got some 09 and part of 010, and then 11 you got a little slump, and then it picked up again at the tail end of 2011 up until 2014. Look at that. So that's when a lot of money started moving offshore, and that's when the prices in Vancouver, in London, that's when London was booming. When they like, open up, London's for sale. So is San Francisco, Los Angeles, Seattle, not yet. Seattle only was open for sale to foreign investors when Vancouver put their foreign buyers tax on. So it's kind of like all over the place. You know what I'm saying? Houses are down 14% from their 2014 peak, and units have been impacted a little bit harder. They're down 17.5% from their peak, according to Domain's largest data for the year of March. Median house prices have fallen 5.2% to $529, while unit prices declined 5.6% to $347,000. Perth property experts say, so okay, you got a ton of years of decline here. Look at all this. 15, 16, 17, 18, 19. How many quarters is that? That is 4, 8, 12, 16 quarters of reversal. And that's why I keep telling you guys, Sydney needs 14 to 16 quarters of reversal of the artificial bubble that was built or that was created. Perth is going to be a lot softer than what Sydney is going to go through because they actually had minerals. They actually were exporting. They were fabricating. Now they have a little bit of lithium ion there right now. They're kind of sniffing around for other things there in Perth. How much of that is Australian proper owned? So that's what we need to look at here, people. So how many quarters does Australia need to gear back to get to reality? See, Perth, you're seeing it right here. Here it is. This is what's happening in Perth. You're starting to see the backwards trend of how many? 4, 8, 12, 16 quarters. And when I told somebody that Sydney needed a 16-quarter reversal, they laughed at me. Oh, it's not going to go that low, Mike. Oh, yes, it is. You have no idea how low it's going to get. Anyways, guys, I want to know what you guys think about this. I would like to know what you guys feel about this. Are housing prices going to bounce back in Sydney next week? Right here. Let me know what you guys think in the comments below. And let me know what you guys think. I'm just sick and tired of this. Reality news needs to kick in. They need to start a new reality TV series in Australia called I Bought a House and Now What? Following 5 or 6 couples that bought at the top. And what are they going to do now? So people could see the reality of how damaging this is to society, to the economy, to neighborhoods, to everything. To job markets, because people can't take jobs in that area because it's too friggin' expensive. Comment below. And if you want to support this transmission, please share one of my videos. Mike Martin signing off. Thanks for watching. And a big hug to everyone down under.